So, good weekend. I don't even know what to say, but yeah, good day, guys. And this is going to be the recap for the third week of June. I had to answer a lot of messages this week after the interview that I did with Rookie, and I think someone messaged me, and he was like, he was asking if it was fake or if it was real. I was confused because I didn't say anything in the stuff that sounded, I don't know. I tried being as plain and as honest as possible, just tried making it too tricky, just having a conversations about the struggles, the journey, what it's like trading that size of account, so on and so forth. But you guys make do with it whatever you think. So this recap, it's mostly just going to concentrate on waiting for clarity of price and patience, which I think I talk about patience way too much right now. I think I'm sounding like a broken record. So patience, because start of this week, what I was going for was shorts on EurUsd. I was at least expecting shorts to 150, and as you can see, this is the line I have marked out here. I was expecting shorts up until this level, but I never got that, and I'll explain how I went along with it. What made me switch my bias, what made me change to the side of expecting longs and basically longing Wednesday, Thursday, and Friday. No, Wednesday and Friday. And Thursday, I did a retracement trade for shorts. So yeah, waiting for price clarity. Now I posted this out on Instagram and on Twitter yesterday. So if you're not following me on those platforms, just check the description below. You see the links to those platforms. So basically, I posted this out on Instagram and on YouTube yesterday. I said, just watch this. I'm basically going to go over everything, and you guys will get to see why I have these levels marked out, what I was looking out for, etc. Now, this I'll walk you guys through what was going on in my head and what I was sharing with the trader and why I was expecting all of this. Yeah. Now, start of the week, the first thing I was paying attention to was this breaking that we had here. So this was the last candle that ran up and took out this highs, right? So what I was expecting was a price to run into this level and then take out the double bottoms that we had here. So mind you, we didn't have all of this. We didn't have this yet. So what I was expecting was a price to run into this level, distribute lower, and then we would take out, let me just use this, and then we would take out 160 level. Now Monday starts, and during the Asian session, price starts consolidating, and we run into this level during the Asian session. Now I am expecting, on the other hand, that we should just get a quick distribution lower during the London Open or the New York Open. But then during the London Open, price consolidates a bit more than what I would want to see. So I decided to see our London Open, and I was waiting for the afternoon session to come. So basically, I didn't trade early in the morning as I usually do, like around 8, 9. So I decided to sit it out and wait. And about 1 or 2 in the afternoon, going on the 15 minutes, what I had noticed was we had a little break in market structure, which was I'm trying to find it. So what I noticed is that we had a little break in market structure, which was this. So this was the breaking structure here. So we had broken structure here, and then price was returning back to the 15-minute OB, which I did tell people in the trade room, like, okay, I'm looking to long euro at least up until the EQ of what this is. So let me look for the EQ here. I was looking to long euro at least up until this point. No, I think it was here, just right below EQ, up until this point. And then I will look for price to run to this order block and then eventually take out this highs here. Now, I went long here, had my stop loss somewhere around here. Went long from this candle, had my stop loss somewhere around here, and price starts running high. As soon as we hit this level, I collapsed about 70% of my 70 or 60% of my positions, and I let price run out for this high. And as soon as we take out this high, that was me being done and out for the day. Now, mind you, after this has happened, this, if you took the same setup, this would have probably been, let's say this was it. I think I had my stop loss somewhere around here. To the same setup, this would have been about a 7 hour. Even if you collapse it around here, this would have been a 3 hour, which is what most people just look out for. It would have been a 3 hour, and then 5, 6, 7. And if you were brave enough and you said, okay, I wanted to have my stop loss right below this block, this would have been a 12-hour trade. And if you had collapsed it here, this would have been a 6-hour trade. I like discussing about having bigger stop losses because not everyone is going to go with a tight stop loss. Now, what I had noticed was after Monday had closed, after we had the close of Monday, we closed back below this level. So I knew, okay, the next day, now this is the level I'm talking about. You'll notice this blue zone here. We closed below this blue zone, which had my confirmations that, okay, these lows were going to get taken. Sorry, yeah. No, that's not what I want to have on. Okay. Yeah, which was my confirmation that this lows here, which right now, and at this point we had 1, 2, 3. So we had triple lows that were just waiting to get taken. Now, my whole thought process behind this is that the unenlightened traders are waiting for this to have a much bigger distribution higher. And if you guys have noticed, more times when they set double bottoms, double tops, triple bottoms, triple tops, they would, even if those lows, even if the, let's say it's a triple bottom in this case, even if this triple bottom is, it's still going to be the bigger indication that we're about to have higher prices. 9 out of 10 times, they will run this level before they push price higher because of one thing. So call it stop losses, which is basically someone bought around here and had a stop loss, or sell stops. Well, basically there's liquidity at this point, which I think I was screaming on IG, on Twitter. I think this was on Twitter that these lows, there is no way they would make price be active this week without taking out this level, right? Be it they're setting price to parity by taking out these lows, or they were going to run this level and push much higher, but there was no way that was going to happen without them taking out these lows. And as soon as that happens, the next day we have another little run higher, and where we run into the next day, it was run into the order block that was at the high of the previous day. So around the high of the previous day, you could just mark this out as a whole if you want to, but I'll just go with this. So at the high of the previous day, the breaking structure, retest, price comes in, totals of this high, further retraces into this, and then we get the quick distribution low. And this is how you know you have the right liquidity levels marked. One straight candle runs straight for that level. One single candle injects, that's a 35 pip drop with one candle. And if you are someone that trades euro, you know that a 35 pip move on euro is considered a big move. If you're someone that has traded euro long enough, you will know that a 35 pip 35 pip trade, 35 pip movement on euro is a big one. So more so to come from one single candle, and that happens to drop it down to this level. Now I see this happen during London Open. I didn't trade this. I didn't trade London Open again this week. I don't even think I traded in the London Open. Basically, I didn't take trades as early as 8. I was taking my trades from about 11, 12, 1, 2, 3. Yeah, 1, 2. Yeah, more so like I basically stopped trading around 2 or 3 p.m. So now one single candle, the distribution happens. Price heads for the liquidity level, the triple bottoms, it gets cleared out. Now, as soon as we hit this level, I am expecting, okay, we might have much lower prices. We might get much lower prices. But then, what you have to understand is, I need to close something. I don't want to hear those notifications again. Quite annoying. Now, after we had the big drop, all of a sudden price comes into a pause. And I'm looking at wondering, why are we getting this pause in price? Okay, I'm wondering, I'm thinking, why are we getting this pause in price? And this is something I had noticed. Now, if you remember last week, I said, yes, I'm expecting price to run much lower and take out the lows that we had from April. But I had one concern. Now, going back to the weekly charts, this was my concern here. This big candle here was my concern. This big candle here was my concern, which was the big fat weekly OB. This was my concern. Now, knowing that we're still trading within a bullish weekly order block after we had broken structure again. So I paid attention to the hourly to see what I was going to see from it. And if I zoom out, Sorry, if I zoom out, sorry, someone is at my door, but I think someone's going to take care of it. Now, if I zoom out, what you will notice is we had this. So basically, price dropped into an hourly OB before the breaking structure. Price drops into this hourly OB before the breaking structure and just pauses there. Price drops into the, I need to take out this blue zone, it's literally confusing. So now we're within the weekly OB, price drops into the hourly odd block and just has a pause, it refuses to push much lower. So I refine this to the body of it, and I want to see price break this low. But while I'm waiting to see that, on the 15 minutes, I notice that we get a quick breaking structure. So now this is Tuesday. Here is a void that we have created. So here is a void that we have created. And now all of a sudden we distribute much lower, but then we get a breaking structure by running these highs here. And as soon as we run these highs, I send a chart into the trade room dojo and I just notify everyone that, look, I know I'm expecting shorts, but this price has come into a pause and we've gotten a bullish breaking structure. I would like to trade price coming back to the daily open. So my plan was to trade price coming all the way back to this point. Let's make this another color, crimson. Okay. My price was to take longs from, if you understand the way I trade, you will know this. So was to take longs from, after we got this breaking structure, was to take longs leading back to this level. Now, mind you, right here, this is Monday's low. So this is the triple bottom, and this is Monday's low. I'll tell you why I'm marking this out. So this is Monday's low. We have broken structure, and then we dipped back into this. So I took this trade, and my plan was to get this happening, a 7-hour. I was looking for a 7-hour, I was looking for price to run into this level. But price dips into the OB, fake push, comes down, total slips within the OB, and then tries to run higher, but then refuses to close inside this Monday's low, right? It refuses to have a close inside this Monday's low, and then distributes low. And then I think at this point, I just went ahead and I broke even the trade because this wasn't my most confident setup. I think that's the word to use. This wasn't my most confident setup because we have refused to break into Monday's low and then run for the daily open. That's one. And two, price just keeps on stabbing and it's as if it's consolidating. So I'm thinking, you know what, we might just break low and we head for this 1600 level that I'm expecting. So I move my surplus to break even. Price comes, stops me out. I think it must be with this candle. Yes, I did a video of this saying it's going to be a flat day. Price comes and takes me out at break even with this candle here. So now I'm waiting to see what Wednesday has in store for me. Now, one thing I always do is at the end of every day, I look at price charts and try and see, because if you, as a day trader, try not to marry a bias. I think it's probably one of the worst things you can do to yourself as a day trader is getting too stuck on a bias. I don't know much for swings. Maybe for swings, it works better if you guys stick to one thing and one outcome only. As a day trader, I could do an analysis for about 15 minutes, come up with the probable outcome of wanting to buy euro. The next day, price shows me otherwise, and I sell and sell hard. Reason why is because I try not to be right. I don't know how to put it. I try not to feel my ego when, in the sense of, if you have to understand, the markets do not care about whatever predetermined bias you've had, regardless of if you've had 25 past winning trades. The market does not care about that. So I simply just follow the money. I wake up every day and I look at price and I ask myself, what is it showing to me? And once I get a picture of what it is that it's showing to me, I do exactly that. I do not think about anything else. So I could say to myself, I want to sell euro this week. Monday, price breaks structure to the high side with a lot of confluence, and I'm like, okay, shit, time to switch my bias and I'm buying. You have to stay flexible. Marrying a bias in this game could probably be one of the worst things that will happen to your account as a day trader. I don't know. That's just my honest opinion. You guys might find it different from someone else. So now, at the end of the day, going back again to the hourly charts. So going back again and looking at the hourly chart, what I had realized is that this Monday's low was now acting as a range. Now, to clear up everything on the screen so you guys do not get too confused, I'm going to take off this line. I'm going to take off everything that is no longer relevant. So now, at this point, I'm no longer looking for sells. So at this point, I am neutral. By the time Tuesday closes, I am neutral on my bias on this pair. I'm not looking for sells. I'm not looking for buys. What am I waiting for? I'm waiting for price to tell me what next to do. And what I had noticed is that we were basically playing Monday's range. So now this is Monday's high here. So I'm going to make this fat dashes. What color? What color? What color? We'll just make it black. And okay, so I'm sorry, I just can't stand those dashes. Let me just make it a thin line. So this is Monday's low. This is Monday's high. Now we know that we have the weekly order block. This hourly order block is basically acting as a guardian of anything against buys. So this monthly order block is basically holding price down. Now we've broken structure on the lower side and we're now consolidating below it. As you can see, there was really not much price movement, nothing really clean below the Monday's low. We just kind of consolidate. So now my theory was, if price, because I remember Christian, someone in the trade room asked me, why did I buy? Now this was basically my thought process, Christian. If you're watching this, or any other person that is wondering why I went for buys on this day, why I went for buys on this day. Now, first of all, we have a void, which is the void created on Tuesday. So I'll draw this out. So we have a void here. And then we have some sort of, I don't know if to really call this a void, but yeah, we have a void. We'll have a void from Friday. So we'll have a void here. We'll have a void here. We'll have another little void here. And then ultimately, we have this. No, I'll just go with this. Now, and I'll explain this other line, what it stands for very soon. So that's the high, and then this here was the low. Okay. All right. So now at this point, we have basically broken below the previous week's low. Now the blue lines here stand for the previous week's low, previous week's high. The black line, let me just make this something much more significant. The green, yeah, medium sea green. All right, perfect. I'm just really trying to define it and put a little more lipstick on it. So, all right. So the green line here stands for the previous Monday's high, Monday's low. Blue line, previous week's low, previous week's high. Now, what I had noticed is that as soon as we broke below the previous week's low, we refused to push much lower. And if price was meant to distribute much lower, I would have seen this low get taken out, and we just see a lot of conviction to the downside. But then this hourly OB acts as a stop on price. You can see the body of the hourly OB literally makes, there is no bodily close below the body of this hourly OB. So this acts as a support level, and price is now consolidating below the weekly level, consolidating below the Monday's low. So below the weekly low, below Monday's low. So my plan was, if we break back into range, if you guys haven't heard me say anything, it's over and over. You guys will always hear me saying something like, price has broken back into range. We're back into range. This into range. That into range. So my whole plan was, if I can get an hourly close into Monday's low and into the previous week's low, that would be my sign that I should get ready to start buying. If they let price come back within this range and I start seeing bullish price action, that means we're going to head for these highs here, and most likely these highs. And my main target was this 1.1350. So basically 1350. This was my main target here, 1350. And then I was looking for, if anything else would get a 20 pip extra on this. So 20, that's not going to be perfect, but that would just have to do. So 137. That's what I was just looking out for. 1350, 137. If we can break back into this. Now, if you zoom in, what you will notice is that we finally get the break and close into this with this candle here. So by 13:00, when we get the break and close into this, I go on the 15 minutes. I always use the 15 minutes for my, well, not always. Let me not make it sound as if I don't have any other plan, but most times I use the 15 minutes. So when we break back into this with this candle, my plan is to look for buys. So at this point, this candle actually is going to look more like this because it was the end of that candle. So yeah, at 14:00. So what I had noticed is that we broke structure. What? Nah. Sorry, I thought I was editing the trend line. Okay, that's what I actually want to edit. So at this point, I realize here's the breaking structure in the 15 minutes. This candle here breaks structure, this one right here. As soon as we get the breaking structure, I go in with buys for here. So yeah, here we get the breaking structure, and this is where I start doing my buys from this candle here. As soon as this dips into this blue zone, I start buying, and what I was basically just looking out for was Monday's high, short-term targets, Monday's high, which was this green level here. So if you had taken the same trade here, that would have been well over 15R. That's only if your stop loss was right below the 15-minute OB, which you would have been wigged out most likely, depending on your broker feed. But if you had a little bit below, probably maybe an extra pip or two, it would have still made about 9R from this trade, because FOMC comes out that day and this runs it. So basically, the weekly range, the daily range, I get my 15-minute breaking structure. I scale in on the 15-minute OB, going for Monday's high. FOMC comes in, pumps up price runs higher. And if you weren't even looking at this strictly from the hourly alone, when this candle here breaks the structure, return back to this hourly OB here was enough for you to go long. So you don't always have to rely on the 15 minutes. I just use it more because my muscle memory works better with the 15 minutes. So you would have at least gotten a 6R from this trade, even if you were going off of the hourly OB. So this is the reason why I went long. And now what the other thing I was thinking about is so let's take away all of this. Now, what I was looking at was, now, if we can get a close above Monday's high, right? If we can get an hourly close, a proper hourly close above Monday's high, that means there's no way this level is going, the price is coming for this zone here. The zone here that we have in price is coming for this. Now, if you look at the Monday's candle, what you notice is that this was discount pricing. Blurry word. Right now, this has way too much colors. It's kind of annoying, but I don't have the time to edit everything and mark it up again. So now this was discount pricing. This is where most of the buying was done. Below in this blurry, I don't know the color, but in this wood-like color, this is where all the major heavy buys were done in this accumulation phase here. So this was a accumulation, manipulation, accumulation again, and then as soon as price broke back into this range, this is where we started getting the distribution. And if you're someone that trades late in the day, after we took out this level, price comes back again to an hourly OB, finds support there, and then another distribution high. So basically what was happening was that after we had to close back within the weekly range and Monday's low, all what we just got was price returning back to hourly levels and distributing, returning back to hourly levels and distributing, returning back to hourly levels and distributing. So here was the first one. Here was the first one. Here's the second one. And as soon as we get this close out, now during the Asian session range, price distributes much higher again. And then here's another one. Now on Wednesday, this must have been, no, on Thursday, I was a bit not sure about my bias again. Reason why is because on Thursday, if I go to the daily, what you will notice is that here we have the daily order block here. So here we have the daily order block. Price runs into this daily order block on Thursday. And if I go out to the hourly, what you will notice is that right where we have the daily OB, we have an hourly order block. So now I'm looking at this on Thursday, and as soon as you can see, price taps that level and we get this nice rejection. I'm thinking to myself, okay, is this about to be one of those things whereby price hits this level and then distributes much lower and messes everyone up that has been going long from here, and we come down for 1600 level? Yes, in as much as I had this bias on top, I'm always flexible. I will never ever marry a bias and say, if it's not this, I am not going to. I'm always flexible, just in case I am wrong about whatever idea I have in my head. Now, price hits this level, distributes low, and then we run higher. As soon as we're breaking into this and we get this early close into this and we start finding support with this candle, I'm thinking, oh, okay, longs are still certain. So what I did at this point was I waited for a 15-minute breaking structure again. So I got my 15-minute breaking structure here. I got my 15-minute breaking structure here, and I did my buying at this point with this candle, and price runs, finds support again, and then we start running higher, and I'm thinking, oh, this is it happening. And all of a sudden, I see this big rejection. Price, this candle was coming down with aggression. I see this rejection, and I collapse my trade somewhere around here before it gets to my main stop loss. And I think that was the day I was going to the gym, updated on Instagram. I was like, I'm down 0.6 R on EurUsd. So it didn't take me for my full loss. I lost about 6% of whatever I should have actually fully lost. So now I'm down 0.6 R, and I'm thinking, okay, what next? And then I realized at this point, here is a breaker. So right where we had this breaking structure, if I draw it all out to this point, what you will notice is this. This is what you'll notice. So we have this candle acting here as a breaker. So we have this breaker that sends price up to run stops here. So now I've taken out stops within the hourly OB, was distributed lower, and price comes back slowly up to that level, which is the 15-minute breaker. Now, I didn't go short from the 15-minute breaker. I went in from the 15-minute order block, which is here. So now going in from the 15-minute order block, then I put in another position at this level. All what I was looking for was price to distribute much lower, right? I was looking for price to run lower, and then I could just mitigate the loss for the day. And if anything extra, I'll be happy. Now, my invalidation level for this trade, or not invalidation level, what I wanted to see to convict me that this short basically was certain, was I wanted to see a close below this low. I wanted to see a close below this hourly breaker, and I wanted to see price run this hourly OB. And as soon as price comes, taps on this level, and we start rejecting. So as soon as price comes, we tap on this level, and all what I'm just seeing, if I zoom out, so all what I'm seeing is a gap, a run to this level, and price rejects. Price tries breaking that level, price rejects. I collapse all my position at this point. The risk reward I've had from here to this point is enough to mitigate my loss and then put me in profit. So I'm basically just sitting out now, and waiting for Friday. Now, coming Friday, we break back again into that level. We break out again. Now, London Open, I just decided, you know what, I'm not going to do anything about this trade. So, mind you, I've had a support from here. So, I'm just on the sidelines watching, trying to understand what exactly price wants to show to me. Now, the only reason why I was going to go long was if I got a bullish breaking structure within this. Remember this black zone here, this black line? This black line here is the daily OP. That was the only thing that would make me say, okay, I've gotten my breaking structure, time to start looking out for longs. And when we got the first breaking structure here, basically within this level, I went down to the 15 minutes, and then I just told myself, okay, I'm going to look for longs now. So this was the first breaking structure, and then on lower time frame, price tried distributing much lower, it didn't. So what I did was mark out the breaker. Now I sent in charts. I'll try and show what that chart looks like. Let me just take this line off. Oh, why do I have so many lines on my screen today? It's quite annoying. So here's the turtle soup. So there's the stop rate. Here's the breaker that sends price to the stop rate. So what I was looking out for was now, here's the breaking structure, right? But within this breaking structure, here's a stop rate again, much smaller stop rate. So breaker, stop rate, breaking structure within the hourly within the daily order block, another smaller breaking structure within the daily order block. So when price drops into this level, I go long. When price drops into this level, I went long from here, and I had about 2 positions here. So I had 2 positions. So basically, I was doing double the risk that I usually do. So I had double the risk that I usually have on my trades, and so yeah, went long here. Price runs. We break structure. When we break the structure again, I went long here again. All what I was looking out for was a price run to this blue line. And you can see as soon as we tap that blue line, that was me getting out of all my trades, and we just get this massive rejection. And finally, price runs for 1,350, price runs for 1,370. Now that was just basically my whole thought process for the day, and that's why I posted this. Was it this one? Oh yeah, this chart here, and I said I was basically going to explain everything. And oh yeah, one thing I forgot, when price broke this level, this is a simple SNR. This is something that I used again during the week. Before I added my second position on the trade, where because I know I went long here twice and then I went long here once, was on the hourly, we broke structure here. So this was basically support turning resistance turning support. So when we got the hourly close above it, price came back, and then that's how we got the support level, and then price ran higher. That was just my thought process throughout the whole day. Monday's range, previous week's range, that's basically what I used to frame my whole bias from Wednesday, Thursday, Friday. That's when the bias came into effect, Wednesday, Thursday, Friday. And you can see me flipping my bias even when I was heavy long. I do care about having a bias, but I do not try to marry it. That's one thing that could really mess with trading, because on all platforms, start of this week, I'm saying short euro, short euro, short euro. And then from Tuesday, Wednesday, Thursday, Friday, I start buying it up. I'm changing my bias. Okay, I'm going to buy euro Tuesday, I'm going to buy euro Wednesday. I sold short term Thursday, and I bought euro Friday for the home run, which is 1,350, 1,370. So that's just basically the whole effect of it. I hope you guys take something away from this. Never marry a bias, and always wait for the clearer picture before you start getting more confident. If I do not see something clear in price, sometimes I'll cut down my risk by half, because it's literally not clear. It's not really what I would want, but the setup presents itself. I'll take it, but probably with half the risk. And when I'm sure, like I was on Friday, right? I know I would say this, but I'll try and put a screenshot. When I'm sure, like how I was sure on Friday, I will go double the risk. So basically, that's just it for this week, guys. Start of this week, if we can stay. So now going back to the daily. If we can stay, I don't know, in my opinion, honestly, if we can stay above these highs, then none without a doubt will hit 1,390. So yeah, 1,390. We'll hit 1,390, which is this high here, and eventually we'll run to 1,450. That's if we stay above this level that we just broke above. But anyways, that's just it for me and this week, guys. I hope you guys take something away. I'll try and put in another recap. So I said another recap, another student interview with Prayesh. And yeah, since you guys really liked the previous one, I'll try and do it again. And yeah, thank you again for the likes, comments, shares. Subscribe, like the video, comment, share with your friends, ask questions if you do not understand anything I said in the video. All right, bye bye, guys.